is you. You promise me you're everything, but never see it through. I don't think you truly love me. If you did, you wouldn't hurt me this way, this way, this way, this way, this way. No way, no way, no way, no way, no way. You tell me that you care for me, but I don't think it's true. You say I'm all you got, but baby, all you got is you. You promise me you're everything, but never see it through. I don't think you truly love me. If you did, you wouldn't hurt me this way, this way, this way, this way, this way. No way, no way, no way, no way, no way.
Yo, what's going on, guys? What is happening? Yeah, been on the phone with Steve this afternoon, ladies and gentlemen. Steve's had the day off. Steve has had the day off. Billy from Philly, what's happening? Now, Finn, how you doing, bro? Welcome to the stream. I know you popped into the Discord earlier on. Mad love and respect for everyone passing through. Who we got in the room tonight? Angel, what's happening? Lewis, what's good? Tino, my robot. Ryan, what's happening, my friend? What's good, guys? I hope everyone is doing well this evening. Mad love and respect to all the YouTube members, Discord family, Patreons, whatever's happening, guys. Mad love to you all. All right. Everything is so bearish, so we'll have the price increase. Probably. Maybe. Your Italian friend? Nah, I ain't from Italy, bro. I'm Greek. I am Greek. I'm as Greek as they come. Mad respect, Mr. Gibbons. F. Gibbons, what's good? Sack Trades, what's happening, bro? PC Shed, if you're in the room. Who else we got in here? Mike Dutch, you in here? Mr. FTD, what's happening? Portugal in the house. Yo, Diganis, what's happening, Jack? Good, good, good. All right, and ladies and gentlemen, listen. Tonight, I'm going to say that we're going to have a short stream. Why? Because Bitcoin hasn't done anything. It stayed in exactly the same spot that we saw from the New York session earlier on today. But we're going to take a look at a few altcoins. We're going to understand what is causing this hold in price. Is there anything brewing? All right, because we've been here before, guys. All right? So, mad love and respect. Let's have a conversation, ladies and gentlemen. We've got a bit of a chilled out session tonight. All right, cool. So, let me kill the music and let's proceed with the chaos and the madness that we call trading. So, ladies and gentlemen, Bitcoin does nothing, but it's doing something. If you look closely, let me just increase the scales on the chart right here, so it's visible for my guys on their mobile phones. Change a bright color. That should serve the purpose. All right, then maybe a little bit more. What's that like for all my mobile viewers? What's happening? Is that okay? 32 is all good? Yeah, that should be fine. All right, then, cool. So look, on the 1 hour time frame, Bitcoin has done a great job of holding this area. Okay. Now, I know there are my bull flag enthusiasts that are actively drawing out these patterns right here, and they are hoping for a break up and, or in the eyes of the market maker, a stop hunt rise, and then they snap it back down again. We're not interested in that. Why? Because we have to understand that we are in what appears to be a cyclical move to the upside. So the narrative says that we do favor higher prices. But there's something happening across the board. What's going on in the US? This story of hiking interest rates. There's sentiment being established right now through all asset classes. So to understand if Bitcoin's going to move, remember, because Bitcoin's new, right? The SPX is not new. The treasury yields are not new. Dollar yen is not new. Gold is not new. These are what you would call the household names for traders to diversify any exposure that they may have in their portfolios. So before we can understand what Bitcoin's likely to do next, we need to understand the mindset of the masses. Where's their head at? So let's roll over and start off with the SPX. S&P 500 saw a nice gap up today. Happy days. And coming towards the final moments, well, it's actually closed now. The US market is now closed, and it has closed quite strong. Traded above its daily open right here, as you can see. Now, previously, they were coming down, and they now recovered the previous red vector candle wick right on the tip of this blue vector candle right there. Okay? So we're in the safe knowledge that traders today were somewhat optimistic. Now, that optimism could be installed by the idea that Mr. Putin has sought to seek diplomatic solutions. Okay, so that's good news right there. All right. However, they throw us off when we see this sort of thing. But this was done 11 hours ago, and this was taken 7 hours ago. Who do you believe? US wholesale prices rise 1% in January, up near record 9.7 over the past year. We've got the FOMC minutes. So look, the calendar. What can we expect going into tomorrow, Wednesday? We've got the core retail sales tomorrow. Again, 1:30, 8:30 a.m. in the morning for the US, followed by the FOMC. And then the next day, we have the unemployment change. All right. So we've got some serious price action that could be rolled out over the next 2 days, ladies and gentlemen, which could explain why Bitcoin isn't doing anything, because we understand Bitcoin or cryptocurrency is a volatile marketplace. All right. Which will lead us over towards the treasury yields themselves. The yields are rising up. Traders are still favoring risk on assets. By that principle, we understand that gold is pulling back. It's dropping now. Saw a little bit of a pullback, and now it's starting to drop. Are they likely to come back into these previous pools of liquidity right here? So that tells me that retail traders, investors, institutional fund managers are taking money out of gold because they don't no longer seek safer options. All right. Now let's look at crypto. USDT chart. If you look at the USDT chart itself, the USD dominance chart against Bitcoin, all right, would it be safe to say or make the assumption that for every red vector candle in the zone on the actual dominance chart of the USDT, and then we look at Bitcoin itself, would it be safe to assume that USDT is probably likely to try and make its way back up towards this area here, which would in turn see Bitcoin's retrace to the downside? Once it comes back up into this zone, will it resume its existing trend to the downside to start taking these zones right here? Now, remember, it's not so much that they're going to take liquidity. This is when traders are converting their assets into USDT. It's a yield. That's why it's a percentage. and people seek safer options. When this is dropping, it means people are investing. When it's rising, it means people are putting their money into it. Okay? Do you see what I'm saying? It's one of those situations where you say to yourself, hold on a second, if there's a W formation right here and then there's an M formation right here, which is going to play out? Of course, when Bitcoin rises, USDT drops. Bitcoin trades against USD. You see what I'm saying? But this chart right here, the dominance chart, is going to give you a good indication of where people are in crypto. Are they concerned? Are they putting their money into USDT? Are they taking it out? Yeah? So, why has leverage been limited on Binance? That's regulations. You know, I no longer am allowed to trade on Binance. So now we have to start looking at various options. So that's put a spanner in the works. Okay. So, looking at Bitcoin's price action, what can we expect from Asia tonight? Well, look, guys. If Bitcoin is going to stay in this narrative and stay in this range, like all the other assets are, based on the fact that we've got news plays happening tomorrow, expect the Asian session coming into the UK session tomorrow to be pretty boring because they're waiting for the news. Because whatever news information comes out about dollar is going to stipulate as to whether or not the Fed decides to act swiftly in regards to any inflation concerns. Now, if Bitcoin is going to continue higher, ladies and gentlemen, the nearest zones that we're likely to see him take out first are these areas here. Why? Because this is where retail traders got caught out. This is where they got caught out trying to go long when price is rising, because that narrative is being pushed across the board that you buy when price is rising. No, you don't. You don't do that, ladies and gentlemen. And if you are new to the channel, and if you are of the understanding that when price is rising, you think it's because the bulls are in control, please do not allow yourself to believe that. Because if bulls are trying to move price higher, how are they able to move price? If there's someone on the other end, that person on the other end has to be the seller. You're saying to me that we got retail traders that are selling. Yeah, they're probably selling, but retail trader doesn't sell when price is rising. It goes against his narrative because people see selling as something that is depreciating. It's dropping, so you need to sell it. So they sell at the lowest point in the chart, right? So if you are new to the channel, please get out of your minds that when price is rising, it's not because the bulls are in control. It's because the seller is in control. And the seller is the market maker. Likewise, when price is dropping, it has nothing to do with the bears, because before someone can be bearish, there has to be someone on the other end to pick up that sell. In other words, they have to buy it. And who's the only person that can buy it? Mr. Market Maker. Simple. Just that understanding alone, ladies and gentlemen, is probably going to improve the chances of you understanding how the game of trading works. And this applies in all asset classes. Why? Because for every exchange that you step into and place an order on, there is liquidity provided by a market maker, because it's their job to make sure that there is a continuous ebb and flow of orders so that the marketplace runs smoothly. Okay? Right, if there is no supply to buy, the price is to the sky. Oh, my days. If you look at it like that, fair enough, bro. Middleman 2. That's bull. Okay, the bulls are in control. They become the seller and manipulate. Okay, bro. I believe they become the seller and manipulate. Okay, then, cool. Here is why that's not true, okay? Let's look at this chart right here, all right? And actually, let me just bring you another chart just to put things into perspective for you. Why the bull trader is not in control. Look at where the bull goes long. He goes long at the highest point, which is why price comes down and attacks the liquidation points. He goes long up here, and then he gets his liquidation points hit. Look at this. The bull goes long at that point because he feels like he's in control because price has been rising. Sorry, mate. See you later, bro. Market maker drops price. Again, The bull buys at the highest point here, pulls it back, hits the liquidation point. Look at this area here, liquidations. Look at this. The bull buys, drops. Ask yourself the question. Now, it's not your fault. I don't blame you for having that sort of mindset, because that's the education that's being put out there, ladies and gentlemen. And that's the sad truth. Why do people buy when price is rising? Why do people sell when price is dropping? Do we need to review that again? Let's look at the sellers. What happened there? If the seller's in control, why on earth did price reverse? So you're saying to me that the seller went short at this point and closed his short in the same instance because he anticipated that price was going to go back up. And look at this. Sell, 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 sell. They are in denial. Ladies and gentlemen, the game is completely psychological and it's based on two indicators, fear and greed. Okay? Traders can't believe Bitcoin could go any higher. Okay? So that's why they go short, go short, go short. Look at the liquidations. Eat, eat, eat. It has been happy days for Mr. Market Maker. Look at that. Eating the short liquidation points. The only guys that have been winning right here are the guys who are buying at these low points. See what I'm saying? Ask yourself the question. Look at this chart. Guys were buying. The bull's in control. The bull's in control. Flip the chart. Go over here. And we kind of see a different story when we run this on the chart. All right? This is how the business works, ladies and gentlemen. And it's nothing special. And it's no conspiracy. But this is how the business works. All right? Above are the short liquidations. Remember, guys, you're in leverage trading. All right? Leverage trading is a different story. You know? Nah, man, that is a wild glitch in the system. How's it possible that there's that many likes? That's unbelievable. I think there's... Oh, okay. I think the likes is now approaching liquidation point. Nah, something's going off there. There must be a glitch. Is there a glitch? 2,200 likes. That is crazy. Sounds like someone's trying to sell you sweaters. I'll tell you what. Okay, the bull bear narrative is a joke. I brought into it for a long time and lost plenty. Jason, there. Look, it's unfortunate. All right? Bullish and bearish indicators are simply emotional triggers. Why? Because the second you see or hear someone say Bitcoin bullish, that's it. You are buying. You don't need to look at no chart. You've already got it in your mind that Bitcoin's bullish. Just go and buy it. That's how they see it. That's the basis of it. But when Bitcoin's bearish, oh my goodness, I've got to sell. I've got to get rid of it. I've got to get out of this. It doesn't work like that, ladies and gentlemen. You know, just because it's dropping, do we go short? No. There are different ways you go short, which will take me into understanding shorter term day trading scalping strategies. Okay? That sounds like a bit of a mad thing, but hear me out. For anybody that is interested in day trading, or should I say scalping. Now, scalping and day trading are sort of two different things. All right? In my view, day trading is I start at 8:30 in the morning, and by the end of the trading day, which will be about 10 p.m., depending on the session that I'm trading in, I would have closed and liquidated all my positions and be in cash. So I won't leave any positions overnight. A swing trader will leave his positions overnight, maybe 2, 3, 4 days. Okay? But when it comes to scalping, you can actually take advantage, right, of traders, or should I say you can take advantage of moves on the smaller time frames where you're fast in, fast out. Okay? That's what it's about. There's one thing that we understand. That is mean reversion. Okay? We know that there is a market maker out there that has clearly stipulated. If you want to know who, go back in the streams and check it out. I can't pull it up anymore. But this market maker stipulated it has two types of strategies. Quantitative strategies. Simple, which is mean reversion. And then more complex, which is machine learning. Now, the machine learning aspect to it is this, ladies and gentlemen. based on a few articles that I've read that have been kindly shared by the guys in the Discord. Now listen, the Pattern Watchers Discord is absolutely fire, guys. It's a place of resource. People come in there to understand the hybrid. I go in there to understand how things work. All right? There are people in there that have got brilliant minds, brilliant brains. They are literally on fire. If I mention something, I can guarantee someone's going to hit me up with a message and say, yo, bro, check this out. This might stir your interest. Let the people know. And then I talk about it. So mad love and respect to all the pattern watchers, man. You got it down solid. You are maintaining the beauty of what a community is. Given cryptocurrency is a little bit of a chaotic place, there is some order. So mad love and respect to every single one of you. Did I pay the Russians to hack the likes? It appears. Yes. Mate, what's going on? 3,216 likes. That probably means that every single one of you people in this stream, okay, have picked up additional devices, signed up with different YouTube accounts and hit the likes. Must be a glitch. Has to be a glitch. Because it can't have 1,500 people sitting stum in the channel. Doesn't make sense. But you know what? Hey, doesn't matter. It's all good. If it's valid, happy days. If not, never mind. Never mind. It's all love at the end of the day. Anyway, let me get to this scalping stuff, okay? Because a gentleman earlier approached me and says, can you talk a bit about it? Because it is quite interesting to hear your view on this basis. So here we go. So 2 types of strategies that the market maker uses, all right? So this is this one market maker. Mean reversion and machine learning. Just a little bit on the machine learning, briefly to explain to you. In terms of machine learning, based on what I understand about it, the algorithm, okay, automatically is designed to place orders in various areas in the charts based on the commitment that he's able to absorb from the move to the upside or to the downside. And he is continuously putting orders, cancelling, placing them, cancelling, placing them. And as price moves up and down, he will then naturally fulfill the obligation of the retail trader who wants to see price move higher. So he then start moving up. He can build some shorts. He's placing shorts at these higher points. And then naturally, when price is dropping down, he's feeling his longs at lower prices. The machine learning aspect to it is the algorithm by principle is going to be placing these positions in certain areas where he's able to commit the liquidity from the retail trader. Remember, the market maker can't do nothing unless you come to the chart and put an order in. Yeah? So he has to give you a reason to believe that that is the case. Whether it is a bull flag, right? Where it's an ascending wedge, whether it's a triangle, whether it's a circle, whether it's a fib, whether it's the Ichimoku clouds, whether it's Elliott wave, whether it's the Wyckoff method, whatever means that you guys convict on the basis that you think price is going to move from one point to the next, you're going to fulfill that desire to see it true and you're going to commit liquidity. All the while, the market maker's saying, happy days, use your indicators because we've got roughly, in this range, roughly about $5 billion worth of short liquidations here, and we have now just had ourselves roughly $11 billion worth of longs built in this range right here. They don't care about your strategy. They don't care about who wrote about it however many hundreds of years ago. They don't care if you know how much money flow is coming into the charts. Because the one thing that you can't change and one thing you can't control, or should I say the majority of people struggle to control, which is why 95% of traders lose, is they get emotional. Fear and greed. You can't create an algorithm based on fear and greed. It just doesn't work. Because not everyone is going to be fearful and greedy at the same time. Greedy, fearful, fearful, greedy. So, mean reversion. When I'm looking at time frames, when I want to scalp, I take a look at the 1 hour time frame to establish where am I in the cycle. So what's the narrative? In other words, for every drop in price, so here imagine this is the 1 hour time frame. You can see price has gone up and it's pulled back. And it's taken a few hours to establish that. When you dive into the smaller time frames, this move up tends to be a little bit more jagged. Okay? And then when you go into the smaller time frames, it seems to be like this. There is these continuous peaks that are made, which in essence are reflecting this move to the upside. So how can we exploit this move to the upside on the smaller time frames? Well, here we go. I like to start with the 1 hour because the 1 hour is going to tell me where I am in the cycle. This W formation at the start of the week and the month, sees price move to the upside. Happy days. Could this, now, hear me out here, guys, and I know some of you are going to be challenging this. What if this is a level 1 rise to the upside? So we are due for a level 2. Because the liquidity is present. Look at all these areas that retail traders went long. If the market maker can build his shorts at higher prices, he needs to get over there. Well, he didn't have a problem coming back here. He hasn't had a problem coming back here. He hasn't had a problem getting here. He's recovered the red vector zone over here. Okay? And we've got these areas right here. Now, the only reason that he has to send price higher is because there's $5 billion worth of short liquidations in the chosen range. At the same time, he's preparing his shorts to realize a return based on the liquidation points that he's going to take back from the market maker. From the retail trader who went long. Okay? So, I've established my cycle. I'm favoring higher prices. Drop down to the 15-minute time frame. I look on the 15-minute time frame. I say to myself, so where's Bitcoin and what has Bitcoin been doing? Well, over the weekend, we didn't see much. We saw this basic price action over the past 2 days, So I'm not interested in looking at the 15-minute time frame. Seems pretty laggard in my opinion. It's traded within the psychological ranges, hasn't done much. So if I want some action, I'll go to the lower time frames. I'm talking the 5, 4, 3, 2, 1, even the 30-second time frame. Okay? Now, they tell you to avoid every time frame below 15 minutes. Why? Because they say it's chaotic. But hold on a second. The algorithm, the market maker, by nature, functions on the lower time frames because he is executing millions and millions of dollars worth of orders. He is hitting orders continuously. You've seen the book map, guys, how many orders are being absorbed every single second. Now, what I like to do to get a feel for what price is doing, I always do this, okay? I always come onto the 30-second time frame and I zoom out and I just look at how chaotic it is. And I say to myself, well, what is it that they've been doing on this time frame? Where am I seeing price being pursued but doesn't continue up or down? So look at this. I've got this area here. There. We've got this area here. We've got this area here. This area. I'm not seeing the same thing, but we've seemed to have some stability in this range. Maximus, would you say that the Asian time zone has a potential big influence on your overnight positions? Usually the Asian session tends to be a little bit quiet. My overnight positions, if I do have them, I'm not using any leverage. So especially with dollar yen, and I'm not in that situation where if I do leave it overnight, it's not a problem because dollar yen usually moves between 60 and 70 pips per day. And my risk to ruin is like, guys, it's dollar yen would have to go to like 103 for me to really wipe my account. And if I were to hold that trade, with no leverage as such, there's always leverage like 1-to-1. But, you've got to be, when you're trading in leverage, it's a different story because any price movement can throw you off. That's the thing. Yeah. 4,487 likes. Guys, what is going on? This is clearly a glitch. Mike, what's the story? Mike, what is the story? Can you explain this? Can you put it out to everyone? Can you let them know? Is there anything that you can do? Or anything that you know of? Why is that happening? Anyways, so when I'm looking for scalping opportunities, I come onto the 30-second time frame, depending on how I'm feeling, go onto the 1 minute, and I look at how many times they have tried to break a previous zone. And look at how often they do it. They spike, spike up, spike up, spike up, and then they come back down, and then they come back into that range. Why? Because these pins to the high right here were where retail traders committed liquidity. So the market maker naturally knows he can get people to commit money in that area. So he's going to get his shorts filled at a high price because he's making the retail trader who is trading range plays and boxes and what have you. And he's doing this and he's placing orders above that area. And of course, when it breaks out of it in some way. So the market maker can see that he's getting liquidity fills from this area here, which is why he will then move price away from it so that he can make his money or fill his positions there. So when I've got that profile in the charts, I then zoom in and say to myself, okay, it looks like the market is favoring higher prices because it keeps on spiking up. So at what point will they drop price? Okay, and how far will they drop price before they actually start to look to move higher? Which will then lead me on to the next aspect. Go on to the 1 minute time frame and then look at the moving averages and see how they're trending. What's the volatility like? Now, I like to use the 50 EMA and the 200 EMA on the 1 minute time frame because that tells me whenever their price expands away from a range or away from a moving average, you can probably bet your life on it. They're going to come back to that moving average at some point. So here's a little exercise for you all, ladies and gentlemen. Go on the 1 minute time frame and mark off every time price moves away from a moving average, and specifically the 200 EMA. For every time you can see a gap like so, you can bet that they're going to come back towards it. Let's do it now. Here we go. Move away from it, come back towards it right there. Move away from it, there's your gap, back towards the 200. Move away from it, comes towards it, but moves away again, stop hunt rise, and then completely takes out the range right there. Zoom out. Here's a good example. Moves away from the range, comes straight back into it. What do you see? W formation, rise, and a mini W formation, rise up. You see, with the 1 minute time frame, ladies and gentlemen, your positions are not by nature designed for you to open, okay? You go long and then say, oh, this is a bit of a strong move, right? I'm going to hold this trade. No. You are in and you are out, because the luxury of scalping is you get an opportunity to step in again, but this time you've banked the profit. When I get the time to do it back in my, just before we started streaming on YouTube, it would be I wouldn't be alien to placing, 100 scalps in a day, 100, 200, depending on what the day was like. I was a machine, non-stop scalping, in and out. I paid minimal spreads. Hardly any spreads on the MT4 platform, trading dollar-yen. Happy days, in and out, in and out. And that's the same with crypto, but I know in cryptocurrency, fees seem to be a little bit of a problem. So how can you overcome that? Look, wait for the price to deviate away from the moving average with aggression. Okay? And then you'll then start looking into certain concepts, right? For example, the V-shaped play, where you're trading in the volatility of the stops, of the shorts. So when retail traders are going short, the market maker is aggressive and moving price down lower. It's not the sellers. The sellers are not in control. The sellers are the bait, because price then comes away from the moving average. As you can see, look, it's deviated away from the 200 EMA, which is this white line right here, moves away from it, and then slowly comes back up towards it. Okay? During the masterclass sessions that I host twice a week for the Patreons, we dive into these aspects and we look at them in real time, okay? Now, they don't always play out the way you expect them to. Here is an example. Look. I mean, look, this is not fair right now based on the range that I'm looking at, because every single V shape that you see in the chart plays out. It comes back up. See, that there is a valid quick entry, happy days, quick scalp out. And if you're not happy to take a scalp of that size, okay, and see Bitcoin from this entry point right here, where you see a green vector candle, after it forms a structure, price has deviated away from the moving average and moves away back into the 200 EMA. If you're not happy with taking a profit from an entry point from here, going into here, trading's no good for you. You're not a scalper. I mean, I'll go back as far as possible. Look. Let's go back. Let's go back as far as we can. Not as far as we can, but... oh, God, it's going to take absolutely ages to do that. But you get the idea. Let's go back to the 12th. Look, here's an example right here. This was at the start of the week, ladies and gentlemen. Look at this for a perfect V play, right? Price drops. Now, naturally, when you're watching for V plays, guys, right, you would think that it's going to turn back because of this. Look, they deviate away from the moving average. That is a nice deviation. Look at it. Happy days. There's volatility there. And you would think that that was the point that you were going to turn and see price move back up. But no, that's not the case. Okay? It drops down lower and it continues. You may have got caught out in this area here. Stays below the 5 and the 13 EMA. What are you waiting for? You're waiting for price to close above the 5 and the 13 EMA once this madness has finished. And it usually happens with a candle that appears at speed. This candle appeared at speed. It formed the first low at the start of the week. This would be your entry point. Why? Price goes above the the 5 and the 13 EMA. It's on the 1 minute time frame, guys. So you have to act quick. Act quick, my days. And then it moves all the way back towards the 200 EMA. Now from there, all the way up to that point, about $150, $200 move. Let's see, from this entry point here, all the way up. Yeah, we're looking at a $400 move, 1%. If you're not happy with 1% on your trading account, get out of trading, ladies and gentlemen. You ain't going to make 100 or 300 if you're not happy with making 1. Okay? You really have to get used to the idea of taking whatever the market gives you. Okay? Because if you're not going to take what it gives you, it will certainly take what you don't want to give. Okay? That's the truth of the marketplace itself, ladies and gentlemen. All right? Okay then. Act quick, put your stop losses and profit in quick. And guess what? This is it. You're going to learn over and over again. I'm telling you, once you get the luxury of being able to open and close a trade. See, like, look at it like this. Say someone right now comes home after work. He's been itching to trade. He opens his charts. He places a trade and he's hoping Bitcoin's going to go higher. All right. Now, for the rest of his evening, he sees price doing this madness. All right. And his evening, he's not able to relax because he's taking in all these moves to the upside, to the downside. He's in profit. He's not in profit. He's in profit. He's not in profit. And then he sits for a whole evening trying to wait for this to break out. All right. He starts to add a little bit of margin and then he's thinking, oh, look at how much profit is up there. He goes into his target profit on Binance or whatever and he looks at what the potential profit could be if price ends up right here. You think I haven't done that before, guys? You know, when I was learning the idea of trading, now I have no interest in what money can be earned because it's not about money anymore. It's always about the idea of the trade playing out. Because you're coming to a system that by nature is designed to mess you up. Finished. You are in a marketplace that has been created just for you to deposit, not withdraw. Keep depositing. Keep thinking it's going in one direction and it's not going to ever come back to it. Put as much leverage as you want or margin. We're going to move price based on what everybody thinks or where they think it's going to go. And that is the sad truth of trading, ladies and gentlemen. And you really need to give your head a bit of a wobble if you really can handle that sort of flavor. If so, welcome to the Traders Reality channel. This is what we're going to be introducing you into and helping you understand how to exploit the trickery of the market maker, ladies and gentlemen. Because that's what it's all about. No matter who is speaking about Bitcoin, whether it's Elon, Mr. Saylor. Yo, Saylor, keep buying your Bitcoin, bro. Keep doing it. Because when you're buying, people are optimistic, all right? When anyone else buys it, happy days. Wales, keep on buying. Keep buying your Bitcoin, man. Because you are telling the retail trader, whoa, Wales have just brought 2,000 Bitcoin. Oh my God, it's rising, man. Let's get on the bandwagon, family. Yeah. No. Unfortunately, the more that you buy Bitcoin, or should I say, the more you buy into the idea of it rising, you are allowing the market maker to fill his shorts at the highest price. And then on a nice day, on a Thursday, you think price is doing great. My position's doing great. No different to when El Salvador declared Bitcoin as legal tender. Everyone was pumped about that idea. Bitcoin tanks. And then you sat there thinking, but it was rising. Michael Saylor brought loads of Bitcoin. That whale brought 2,000 Bitcoin. Surely that was going to be a favorable thing. Again, you are stepping into the most managed business. This is where money is controlled. And the sad truth is, when you guys realize a profit and you don't take it, okay, you'll always end up giving it back. Ladies and gentlemen, mad love and respect for watching tonight's stream. I did say I was going to look at some altcoins, but I've let the stream roll over. I have a very busy day tomorrow. But if you are new to the channel, make your way over to the website. It's pinned to the top of the chat, and you'll be able to download these indicators. There's playlists in there, linked to YouTube, where you can understand each aspect of the hybrid system. It's free to download. You don't have to pay anything. Get yourself into the Discord, okay? And I'll be speaking to you guys tomorrow at 2 p.m. to bring in the New York session. Thank you for the 4,724 likes by all my synthetic friends. Mad love to you guys. Steve, thank you very much for doing that for me, my brother. I know you got YouTube on lock. Mad love to you, Steve. Ladies and gentlemen, have yourself a wonderful evening. Take care of yourselves. Peace.